Hey guys, so as usual, all information on this channel is for educational purposes only. It is not intended to provide financial advice, yada yada. Here we go. So today I wanted to talk about Bollinger Bands. Sometimes you forget or don't even realize that all these indicators that you use or are able to use were at one point created by a person. So Bollinger Bands were developed by John Bollinger in the 1980s. Excuse me, sorry. You do yourself a disservice by not watching a video on someone who created the indicator. So I'll link to his webinar, one of them, in my description in the video down below. I won't be able to explain the nuances and intricacies, including the math, like Bollinger can, so definitely check out his videos. What I do want to highlight is how I use Bollinger Bands, or more affectionately as they're known, BBands, to complement other indicators and oscillators that I use while I'm trading crypto. We've had a few super squeezes over Bitcoin's history, and I'll discuss those as well. So first off, Bollinger Bands are described by John Bollinger as a squeeze is the birth of something, and a bulge is where a move goes to die. He goes on to say, quote, "We often get a fake out move in a squeeze. The initial move is in the wrong direction. We call that a head fake." So looking at this Twitter chart that I have pinned to my Twitter account, you can see before I describe any of this stuff, I'm saying we have hours and hours of sideways, and my first line as this happens, B-bands tighten, okay? Unfortunately they aren't on the chart to show you, but I'll go over that more in detail. You can see that as we go sideways, we're consolidating, okay? So it's sideways nothingness. And then we get a breakout down, and this is what Bollinger describes as the head fake. We break out down into the double bottom. Now my one gripe with Bollinger Bands is, when do you know that it's a head fake and when don't you know it's a head fake? Typically on the largest time frames you'll get the head fake pretty obviously over the actual move, and I'll show you that as well. So that's a little tough to discern. You need some discretion there. So one day I just randomly tweeted this out at Bollinger. He's got a Twitter account. You can follow him at BBands. My idea was that all these BBand squeezes are basically triangles as well. And this is how I generally play it. If it's a squeeze like this is a 4-hour. Bids here, stops here. So hopefully the head fake wouldn't hit the stop. You can always put your bids in this zone with a stop at some horizontal behind here. One other thing I'll say about B-bands, it's best just to use the default 20. 14 has worked for some people in crypto because crypto moves a little faster, so 14 gives you a little quicker signal. But Bollinger just says 20 is the best thing that he's ever found and used. So yeah, I tweeted this at him, and he just randomly said basically that, yeah, he agrees that triangles are related to the squeeze, and it's important to watch for that when you're watching the squeezes. So let's look at one of the gigantic super squeezes we've had in Bitcoin. So this was May 30th, 2015. This is the depths of the despair that is the $200 range. One thing you'll immediately notice about this chart before the bands is, go ahead, I'll let you guess. Okay, it's the consolidating volume. And you'll see when volume's decreasing like this and we're getting a squeeze, that even reinforces it further that a move is going to happen. When it's on a 3-day chart like this is, that says that a big move is probably going to happen. Generally, the higher the time frame, the squeeze, the bigger the move. If you have a super squeeze on a high time frame, you have a lot of consolidation going on. And the rest is history. We obviously broke up from there a couple times now. So this is the daily, February 7th, this year. And you can see, so the other thing I have on here is called the BBand width, and I'll show you how to put that on in TradingView. What it does, it gives you a numeric value for the width. And then what it does is it highlights it green if it's above the bands, and it highlights it red if it's, green if it's above the median of the bands, and red if it's below the median of the bands. The idea is if you have a tight B band and the price is above the band median, then there is a higher probability that it will break up than breaking down, and the opposite is true. If the price is below median and there is a squeeze, it is more likely to break down than up. Again, the problem with this is the head fake stuff, which is why it's hard to judge all the time exactly what's going to happen. You'll see here we had this super squeeze, and it ended up breaking up, even though this was below the median of the B bands. This also broke up, even though it was below the median of the B bands. I think the best signal is when you have successive candles above the median, yet it hasn't completely broken out of the bands, like you'll see here and here. Yeah, just one thing to pay attention to. So this is the weekly, this is last month, May 18th. And again, I tweeted out to BBand, Mr. Bollinger, I said, we've never had a weekly squeeze this tight for this long. You can see we had, there was 1 week where the bands were this tight. So this is the numeric value of the width, and you can see as volatility increases, so does the width. And remember, a squeeze is the birth and the bulge is the death, okay? So here we have a major squeeze. So this is beyond anything else that a major move is coming. It looks bullish because it's above the median for so many weeks. This is the ascending triangle if you don't recognize it as well. So that's a chart pattern that can some confluence there. So anyways, I tweeted at him and he liked it. He said it was time to pay attention. Right here. That's a lot of compression. Time to pay attention. So then later on in the next day, he tweeted out his own chart on the daily. Again, BBand width, and he uses another thing, BBand percent. I'll let him explain that in the webinar. I don't really understand it completely myself. So again, we're looking at the daily. This is towards the end of the squeeze. And again, they're tight. They're above the median. Waiting for bands to tighten isn't fun because generally that just means sideways, which means no trades to be taken. But when it is sideways, B-bands are the one indicator you know exactly when and why you should be using. And how they can help you. And they work on any time frame. Higher time frame is always better. Again, you'll see 4 hour. We have a squeeze, which is the birth. Bulge is the death. So we consolidate, squeeze, bulge. And you'll see again volume consolidating, RSI consolidating. This is actually a bear div because there's a higher high and a lower low in the oscillators. But there's also consolidation. I don't remember whatever happened to this. This was June 6th. I think this broke up. Sorry, I don't know. I'd have to go back and look. This was an instance where Cloud was telling me, based on the Kijun support and pivot support, that this was going to break up However, this actually broke down, and you can see I don't have the Bollinger, the B-bands on here, but I have the width, and you can see that there is, it's below the median because it's red. So it actually did break down and then proceeded to consolidate and break up again. And you can check that. This was May 6, 2015. I also like to use B-bands during a rally to see what the health of the rally is. And this was June 5th. You can see we had these pushes, consolidations, pushes, and then we had a super tight, relatively squeeze. So that just tells you where, is it good to take a long all the way up here based on the bands? I don't know. Again, I don't remember what happened June 5th, 2016. You can also use bands immediately after a move. This did end up breaking up. This was June 12th. If they get tight really quick, that usually represents a flag, bull flag or bear flag. So they're even useful on the 15-minute time frame. And again, you'll see how wide these got and how quickly they came in. That usually indicates another move is coming. So this is a live chart from TradingView, and I just want to show you guys how to merge things and how I sort of manipulate the B-band width. So what you want to look for, go to indicators. You want to look for, you can just type in custom Bollinger Band width or Bollinger Band width, and you want to look for the lazy bear version. That's the version that'll give you the green and red highlights. And then what you can do, I like to make the highlights bolder. So you can click, you can just move that up so they're easier to see. It's probably too bright. And you can click the green. Move that up. And then what I like to do is merge up so it actually puts it on the chart. It looks like a mess. And then what I do is I get rid of the plot because I don't really care. I just care about the squeezes if it's above or below. You can always just use the visual bands on the chart to see where that is. And then what you do is you change the level of the threshold for the highlighting. And let's just go to something lower like that. And we'll shut off B-bands as well. So how I like to do this is I like to look at, relatively speaking, if I'm here in this zone, I want to see what bands were like in previous zones at that same level before we got to move. So let's go up a little bit. You can see it predicted this move here. So these bands, although they were tight, I know they were on my last video, they weren't that tight. Let's move this up a little bit. And if you have this on the chart, you can slide it, slide up the threshold up and down. But you get the idea. If I'm sideways and I'm squeezing, I want to compare it to another relative point. You don't need to get a super squeeze every time. You just compare it to the last time you were in this zone and got a move. This squeezed, but we didn't really get a move. This squeezed, but we got a move. So I'd want to compare whatever this threshold is. We go down to 0.009. So anytime I'm looking for a move again, based on B-bands alone, I would be looking for this 0.009 level. Because that's the most recent time that the bands have moved based on that squeeze. Alright guys, so I'll leave all the comments, or all the charts in the comments description. If you have any comments, let me know. Happy trading.